All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Thank you so much for being here. Much love to you all. Yeshwant, thank you for tuning in from India. Much love to you. Travi Trades came from Casper Crew Game Day to the hoodie stream. Awesome, man. Well, hopefully you got something there, man. That's awesome. I love Jason Casper. I love those game days, so it's awesome that you got to participate. Crypto Wander 5813, what's up, man? Thank you for being here. Thank you for smashing the like button, and thank you for modding. Guys, please do hit the like button if you do get any sort of insight into the market from this live stream, or if you're just enjoying the live stream, enjoying the community. Please hit the like button. Please support the channel. R Pink, thank you for being here, and thank you for modding as well. Also, thank you for hitting the like button. Eric, good to see you as always. Samuel S44 and Mark Dutch, thank you guys so much for being here, and thank you for modding as well. GSave77, God bless you. Good to see you in here. Wayne Rossi, good evening, Divine. That monthly naked POC looks juicy. Yes, it does. And I am looking for the swing failure pattern of the highs into that naked monthly point of control at 81,435. Now, we still are seeing that selling exhaustion channel. So, or excuse me, buying exhaustion channel that we are forming after the aggressive move. And I talk about this a lot on the channel. You get the aggressive move up, started to be followed by that choppy overlap, that buying exhaustion channel. So the more bearish divergences that we develop upon creating these highs within the channel, one high here, one high here, we have 4 hour and under bear divs. If we can create another high, and guys, we might come up towards the top of the channel and swing, we might SFP the overall highs at around 82.8. So it's not guaranteed that we reject from the naked monthly, but it coming up to the top of the channel again, if we do have another drive of bear divs as we're coming up to the top of that channel, that would be a good overall area to end our larger wave 3. And our wave 3 counts, the sub count of the wave 3 starts from 62.2. And excuse me, 62.2. We could see that move up to take out the range highs before rolling over for that couple weeks of a correction, which we would be expecting in a wave 4 before maybe even potentially coming up to 89 to 90,000 in a wave 5. But welcome in, Alex. Welcome in, Matt Jenkins. Welcome in, Time Attack. Thank you so much for being here. Much love to you, and thank you for modding. TXRX0101, hello to you. Mike Wasnowski. Mike Wasnowski. Welcome in, Mike Wasnowski. And John Boomdog Saint, welcome in, man. Yeah, we'll look at Aster. But thank you guys so much for being here. So real quick here, a little bit of an update on Bitcoin. Obviously, not a lot has happened this week so far, but we were looking at last week, and let me clean up this chart just a bit here. Let's turn off those naked monthlies. I just want to turn off our exhaustion channel. Overall, we're looking for that ultimately, whether this move up from the lows at 57.7 is going to be a 3-wave corrective move. If it is, and if we make a lower high and start to really reject and fall back into our value area, it could be bad to come out to take out your 57.7K lows. Or in a bullish case scenario, we're really looking for this to become an impulse, a 5-wave move to the upside, where it would be nice in that 5-wave move to break the highs at 82.8 and change market structure to a bullish market structure on the weekly time frame. And so we're kind of in the midst of that higher time frame process right now. So within the higher time frame process, we're in a wave 3. And the wave 3, once we're looking for a sub count within that larger 5-wave impulse. So if we turn on that impulse, you can see our wave 3. Now our wave 3 doesn't have to end where it's at now at that 81.1K highs. It could continue pushing up here locally, because within our larger third wave, we need a sub count of 5 waves within itself. So if I zoom in onto the 4-hour time frame, and that is going to be going from that 62.2K low right down here. And it's a double bottom low, weekend low, but you can see that we have that initial move up. We rejected from our golden pocket. That was also the value area high of this small range. And then we saw a pullback towards our 886. That is a higher low in a wave 2. And clearly this move up that we saw last week, there's no other way to look at this rather than a wave 3. Or if it's going to be a larger ABC, you're looking at that as an impulse and a C wave. But this is clearly impulsive here. Now, earlier this week, we had talked about the pullback that we saw over the weekend and whether that pullback that we saw over the weekend was indeed a wave 4 because it is a 3-wave corrective move. You can see we get our initial move down, followed by a move up towards 786 golden pocket. Then we get that move down for another weekend low, another Saturday low. And then we broke the highs. And when we broke the highs earlier this week, 1, 2, 3, 4, 5. So we do see a 5-wave count in there. But this wave 4 is about 5 days long. And this was about a day and a half long. That pullback that we saw, a day and a half to almost 2 days long. Generally, your wave 4 corrective move is shallower in price of a correction, but larger or as long in time. Well, okay, so, but it's still, time is not an invalidation. It's just, it lowers the probabilities or higher the probabilities depending on if they match or not. And we did get that new high being made into resistance. And that's why one of the reasons we were looking at a short from this box is because we could have seen the end of the third wave and a bigger pullback towards $74,000 to match our bigger second wave on that higher time frame impulse. But right now we are still in bullish market structure, and we're starting to form that exhaustion channel. Now, a lot of people might be looking at this as some sort of bull flag, but generally a bull flag, you see the pole and then you see a descending channel for the flag, and then you get your 3-wave corrective move in the descending channel, and then this breaks up again. But when you kind of see this ascending channel after an aggressive move to the upside, that's generally a sign of buying exhaustion or exhaustion in the market. The buying pressure is starting to lessen here, and you're starting to see those bearish divergences come in, which is a sign that this could roll over soon. So I am looking for a rollover soon on the Bitcoin price, but it's like, where is it going to roll over? Is it going to roll over from the highs that we made on Monday? Is it going to roll over from the 81.4K naked monthly point of control, or is it going to continue up to SFP, the range highs? And we don't really know. All we can do is manage the lower count within this. And one of the possibilities that I talked to you guys about yesterday was within our sub-degree third wave. So remember, this is a 1, 2, 3. If this is a 4 pullback, we could be looking at some sort of contracting diagonal in here for a wave 5. And that is a motive wave. You will see overlap between the highs of 1 and the lows of 2, wherever that, wherever these, the lows of 4, excuse me. But it will be, as long as it's a motive wave, as long as it's contracting, then that is a valid motive wave. And actually, these contracting diagonals, or whether you want to call it, like in pattern trading, a rising wedge, these often do form after an aggressive push to the upside. And these buying exhaustion channels often form after a big push to the upside. So if we throw on this buying exhaustion channel, you can see that our first move up, which was a 5-wave move, a sub count, so that is an impulsive move. And then yesterday we talked about how this move to the downside was a running flat here in a B, and then you got your C. So we do have a 3-wave move to the downside, and you did not hit the bottom of the channel, which is important because in order for it to be a contracting diagonal, you don't want to hit the bottom of the channel. Now, if we do push up here, one of the reasons why I'm looking to take out that high from Monday is because in a contracting diagonal, we would want to see this continue to push up. And then we might even see one more pullback and then one more high to continue contracting that diagonal like that until we get a 5-wave count from pretty much our weekend lows on August 22nd. One of the possibilities that we could look at is this third wave right now is going to reject from 81.4, that naked monthly point of control. We might only get a small pullback to hit that anchored VWAP, to backtest that anchored VWAP, and then we might get that one last aggressive move to come up in SFP, the range highs, and that would overall still give us that contracting diagonal. As long as we don't hit the bottom of this parallel channel, we can say that the contracting diagonal is a valid scenario to be watching. Okay, let's talk about more of a bearish scenario. Let's say that this pullback that we saw over the weekend was the wave 4, and this was the wave 5. And now our sub count of the third wave is done, of the larger daily third wave is done. Then what we would want to see is, first off, you wanted to see this first move down being an impulsive move. Well, clearly you can't count an impulsive move in there. If we zoom in, let me zoom into the 1-hour chart. On the 1-hour chart, it is very, very hard to count an impulsive move. Now, in that first series down. We talked about this on Tuesday. 1, 2, 3, 4, 5. You do have a 5-wave move here. If this is going to be an A, B, C, that still could be a running flat, you would have to count another 5-wave move in here, which would be, first off, it's way choppy in there, but also if you were going to see a larger move, an impulse to the downside, you would want to see a 1, 2, and then this would have kept going as a 3, and then you wanted to see a 4 and a 5. So we're not really seeing that. We're seeing a bounce after grabbing some liquidity after taking out those local lows, and now we're pushing to the upside, even flipping the anchored VWAP again to support. You can see after rejecting from the golden pocket, which that was a scalp trade that I laid out overnight last night, came down, back tested that anchored VWAP. Now we're breaking above the highs, and we're even trying to right now see if we can flip the VWAP and that channel midline to support. And if we do, we're going to continue up higher here. We would have to say, okay, it's because of this initial move down, it's highly improbable that this is the end of the third wave count from 62.2 and that now we're going to nuke to the downside. But if it is, if we want to force it just based off structure, market structure, we could say, hey, somehow we got to force a wave 1 in here. We would want to see a lower high being made for a wave 2, and then you would get that big push down in a wave 3. Now, it might not come all the way to 74. It might, see something like 3, 4, 5, something like that. But it's highly, as far as the Elliott wave count goes, it's highly improbable just because of this move that we saw from Monday to pretty much yesterday. And so, in other words, could we see a bigger corrective move instead of seeing a contracting diagonal here, a 1, 2, 3, 4, 5, some sort of contracting diagonal? Could we see a larger sideways correction actually going from last Friday's highs? Because the initial move down from last Friday's highs was a 3-wave corrective move. We would have to look at maybe this as a larger A, B, C in a 3-wave corrective move, and then you would be looking for another 3-wave corrective move, preferably to take out those lows at 75.5K. And then that would be a wave 4 in itself, and then you would expect to continue up, and you would probably expect to break those 82.8K highs with a wave 5. But that is not the highest probability for me. Right now, it's when the Elliott wave count started getting really messy like this, I like to pay attention to more of the simple concepts and simple scenarios. And as far as a scenario that has worked and been time tested over and over and over again is when you get that aggressive move to the upside, and then you start to get the choppy overlap with bearish dips in between those highs, that is a sign that a move is coming towards an end. And so now really what I'm paying attention to is this channel, this buying exhausting channel. And I talked about this in yesterday's video. As long as we maintain structure of higher highs and higher lows within this channel, I do expect us to break our highs from Monday and potentially even come take out our 82.8K highs. Once we start to see some bearish market structure, maybe this channel starting to, even if we make a higher high and then we break and make a lower low and start to break above one of these lows inside the channel, that is when we can speculate that, hey, the overall move, the exhaustion is starting to play out with that bearish move to the downside. And of course, you can try to catch the absolute high, or if you want more peace of mind, you could wait for the market structure break. You get that bearish break in market structure by taking out a low, and then you would look for a dead cat bounce and a retest of that golden pocket area where you could short that, and then you would look for that big move down. Okay, let me check the chat here. Welcome in, everybody. No nonsense. Welcome into you. Tarusun, hello. Welcome in. Amanda Lee, could be forming a lower high. Which time frame do you need to confirm a lower high? Yeah, we could be forming a lower high. So obviously from Monday's highs at 81.1K, if we pull our Fibonacci golden pocket 786 zone, you can see that first off, last night we had that reaction from the golden pocket and we saw a little bit of a move down, but overall from that low, we maintained bullish market structure. Okay. And then if we look at turning on our 786 along with that, actually even yesterday we hit the 786 and we had that big move down. So now we're coming up to that 786 again, and you can see we have some wicks above the 786, but we're not actually closing hourly candle bodies above the 786. If we hit the 886, let's turn on our 886. Have we hit it yet? And I will make that orange so you guys can see that a little bit better. It looks like we've barely slightly front run the 886 so far, but in a larger uptrend, and this is just an 886 theory that's part of Elliott Waves. If in a larger uptrend, we're making higher highs and higher lows in bullish market structure. If you have a drop to the downside within a bigger uptrend and your retracement does come up and hit the 886, that means you have a higher probability of taking out that high rather than really seeing a true breakdown. And so, you know, maybe we've hit it, maybe we haven't. Let's see here. Let's throw on our horizontal ray here. So we got 80,835 and 80,847. So we topped out $12 before hitting that 886. So officially the 886 hasn't been tapped, but it's relatively right there, right? So that gives me a higher probability that we are going to come take out Monday's highs, just because we've gotten so close to it. Now, let me read that question in. Could be forming a lower high? Which time frame do you need to confirm a lower high? So for me, I would really look at from that low that we saw yesterday. We have a locally bullish market structure, right? 1, 2, 3, 4, 5. But we're making higher highs and higher lows. So in order for this to confirm for me that this would be a lower high, and then we're going to come down and make a lower low below Wednesday's lows, I would want to see a bearish break in market structure. And in other words, if we're looking at a high, higher low, higher high, higher low, higher high, for me, the one thing I would want to see in order to confirm that we're likely going to take out yesterday's low would be to break 78,910 or 78,911, let's say, because that would essentially mean that we are going to be rejecting from the 886. We are going to be losing our VWAP, and we are going to be losing our channel midline. And then if we break that, that is officially a lower low within this structure, because this is really what we're trying to pay attention to locally, very locally. And if we do get that bearish break in market structure, now we could say, hey, you know what? That entire move to the upside, market structure break here, this entire move to the upside was likely to be a lower high put in. And then we would look for something like some sort of retracement here. We could short the golden pocket, and the target for shorting that golden pocket, you would put your stop above the highs, and the golden pocket's probably going to be a little bit higher there, but you would put your short above the highs, and you would be targeting yesterday's lows, because if you make a lower high here, you would expect to make a lower low below yesterday's lows. And that trade setup scenario, let's see, would be around a 3-to-1. It depends on where you bounce. You would actually have to pull the golden pocket, and you would have to see if it's worth it. But that would be a scalp short trade that could turn into a larger short trade as well. A larger move down to $74,000 or lower. So that's to answer your question, that's what I would be looking at. Now, if you wanted to say, hey, you know what, I don't want to wait for a drop all the way to $78,900, you could zoom in on the 5-minute time frame, and maybe in some ways you could say within our local move up, you can see on the 5-minute time frame, you have a high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. This is just internal chop. Higher high, higher low, higher high, higher low, higher high. So you did break 5-minute market structure bearishly by taking out this low earlier today at $80,200. You've now seen a 5-minute market structure break bearishly. But overall, your overall trend, if you're looking out on the larger time frames, you are still maintaining bullish market structure until you break the low at 78.9. And that's the low that's important to me. Earlier today, right before we started the live stream, I popped into the Telegram, and I actually am looking for us to come take out Monday's highs based off what I'm seeing here. We're maintaining bullish market structure within our exhaustion channel. So I said if we come down to our VWAP and we bounce from the VWAP and close a 15-minute candle above, I'm actually looking for a scalp long opportunity where I would be looking to take out the highs from Monday into that naked monthly point of control at 81,430-ish. And you can see that this trade setup is a 4.5-to-1 risk to reward ratio. I did enter about half the position, so I have about 0.4% risk on it, not even 1% risk if I get stopped out. But on the 15-minute time frame, if we go to the 15-minute time frame, you can see we came down, we wicked below the VWAP, and then the next 15-minute candle, we closed. I was waiting for that candle close, and I said as soon as we close a 15-minute candle above, I will start to enter. So I entered not even all of it yet. If we come down and bounce from this channel midline, I might add the rest of that, like 0.5% of risk into the trade. And then I would be looking to come up to take out those highs at 81.265-ish, 81.2. That's kind of the scalping we're going. We're just trading the daily momentum, right? The momentum for the day has been a bullish momentum. And remember, the trend is your friend until the end. So I'm looking for this trend to continue pushing to the upside. Now, if I get stopped out, I get stopped out, right? You can lose 70% of your trades as long as you're using proper risk management and proper position sizes. You can only win 30%. You can lose 70%. You can still be profitable. So it's okay to lose a little bit of a couple scalp trades as long as you're taking that proper risk management and keeping your losses small and calculated and letting those runners run. The winners win and win big. So, just a little bit of a scalp trade to ride the momentum. Another thing, guys, on gold, I do want to cover gold before the end of the live stream because gold is trading so technically right now. And after we ended the live stream on Tuesday, I did get into a gold short trade, but I do think gold might have momentum continuing to the upside. As well as hype, by the way. Hype looks to be in a multiple 1-2 impulse on the lower time frames, and I do want to show you guys that as well. We have some good trading opportunities, scalping with the trend, and we'll look at those in just a second. But let me see. I got a super chat here. Jesus Save 77. Thank you so much for the super chat, my man. Much appreciated. Thanks for all you do. God bless. Divine and God bless. If you have time, can we take a look at XRP? XRP. Yes, for sure. Jesus Save 77. We'll definitely look at XRP. Let me read the rest of this chat real quick and we'll get right into that. Mind Tapestry, much love to you, man. I hope you're doing well. Thank you for always this wonderful live stream. Well, thank you for the kind comment, man, and blessings to you, Mind Tapestry. Where does that anchored VWAP start? That anchored VWAP starts from the all-time high. Let me zoom out here onto the daily. So you can see our anchored, this is on the Coinbase chart, which I think is the highest respected chart as far as volume levels go. From our all-time high, our anchored VWAP, and you can see we're coming down, and we actually hit that anchored VWAP on Friday of last week, which was also where our 1.618 trend-based Fibonacci extinction was. Oops, let me get that. And let me show you that 1.618 trend-based Fibonacci extinction. You can see it was right at that anchored VWAP. And now, by the way, guys, for the past couple of days, we've been talking about how our anchored VWAP has been acting as resistance. Resistance on Friday, resistance on Saturday, resistance on Monday, and with the candle body not closing above it, right? Or I guess it closed pretty much right at it. On Tuesday's live stream, I said this was actually bearish, that we were seeing a big wick above to hit resistance, but we were closing our daily candle body at or below the anchored VWAP. And then even yesterday, we kind of closed our candle body just above the anchored VWAP. But today's candle would be the first candle open and close on the daily time frame above our anchored VWAP. So that would be very significant in my opinion. And it would be significant for me to say, hey, maybe we're going to tackle the highs before seeing that wave 4 correction. And so today's daily candle is going to be super important. And right now it's looking pretty good. If we look at money flow on the daily time frame, still looks pretty decent for Market Cypher. But for Nami's money flow just looks really, really bullish right now on the daily time frame, continuing to push up. We had some daily bear divs that are now being invalidated with today's move to the upside. So that is also another really good sign for the bulls, that the daily bearish divergences that we were seeing on Nami are now being invalidated with that blowing out of this momentum wave to the upside. If we do, now, overall, guys, we're still looking for a pullback coming soon. We don't know if that's going to be today. We don't know if that's going to be over the weekend. It would make sense, maybe Friday going through the weekend, but we're looking for a pullback that is going to be very similar to this pullback in here. About 11 to 12 days, maybe 2 weeks, 14 days. But what we might be seeing inside this third wave, we might be seeing that contracting diagonal to end the third wave. And then we're going to get the pullback in our larger wave 4 on the daily time frame. So in other words, we're going to be looking for eventually this wave 4 pullback on the daily time frame, but we don't know if the wave 3 is in or not yet because we're still maintaining market structure within that exhaustion channel. So as long as we're maintaining market structure, bullish market structure within that exhaustion channel, we can't say for sure that the third wave is in yet. Once we start to see a market structure break, now we can say, okay, we're looking for a bit of a cool off and a pullback. Not a major reversal, but a bit of a cool off and a pullback over the next couple of weeks. I would expect to bounce. And guys, this support level right here on the chart, 74K to about 73.5, I cannot express to you guys how crucial of a support level this is to hold. Because if we do see, and we have seen this, actually now it's pretty much at 74K. You can see our value area high is rising to pretty much exactly match that 382 Fibonacci pullback. But if we do start to fall back inside of our volume profile, after seeing a breakout of it, and that would also mean sort of a rejection from our anchored VWAP, that would make it a greater probability, not guaranteed, but a greater probability that this was a 3-wave corrective move, and that if we fall back inside, we could see a very aggressive dump, even coming down to take out our 57.7K lows. So whatever pullback we see coming in the next couple of weeks, we want it to be a slow, grindy, corrective move, and we really want to hold 74K. But for me now, depending on how we end this move, if we end it with SFPing the highs and then we get the move down, I would really be looking for another swing long opportunity from our wave 4 corrective move. And what I mean by swing is I'm not talking about like a move up to like, $100,000 or so, but it would be a nice, multi-$1,000 move. You maybe get that swing opportunity, and I would be looking for that move up to $88,000 to $90,000, which would be a huge swing as far as it would be, a 20% move to the upside, $15,000, $14,000 move to the upside, and your risk to reward ratio would just be so good on that. So that is something we can look for in the future. We're still developing with this exhaustion channel. We need to wait for this exhaustion channel to kind of finish and break before seeing that, but that is what I'm looking at. All right, took in scalp long from the VWAP, bounced high. Awesome, Wayne Rossi. That's really awesome. Yeah, that scalp long opportunity I just mentioned right before the stream, the reason why I was even looking at it is just because the risk to reward ratio is so good on a scalp, and we're playing the trend. So it depends on when you got in, but look at that's a 4.5 to 1 risk to reward ratio coming up to that naked monthly point of control. And your stop is just going to go below that local stop. By the way, we are seeing another reason why I took the long is because we are seeing bullish absorption right now on the charts. From the low earlier today, we are making higher lows in price action. We are making lower lows in the CVD, and it was on a steady increase in open interest. So that is bullish CVD absorption. The target of the bullish CVD absorption is to take out your local high. So this was another factor that allowed me to have high confidence in that scalp long opportunity that we're seeing playing out right now. Now we are starting to see this prolonged dump in open interest compared to this, and I do not like that. When that occurs, it does lower the probabilities that the bullish absorption will play out technically the way we like it to. But it's there technically. Okay, French Toaster, much love to you, man. Welcome in. Does anyone know where to buy the CDLAI token on presale? Nope, sure don't. Could you please quickly share your pitchfork setting tools? Yes, Mike, absolutely. And I think you were the one that asked me about this in the Telegram. So let's see, into the macro golden pocket. Javier, much love to you, man. Good to see you in here. Do we even know what caused this movement. The charts were so bearish, nothing makes sense, confused. Well, no, actually, Javier, I have to disagree with you. The charts weren't bearish as far as market structure goes. Now, remember, when you're looking at an asset, market structure is king because you can see multiple drives of bear div. Sure, we were seeing bear div on the 4 hour between these two highs and under, even on the 8 hour for NAMI, but we were still maintaining an overall bearish market structure of our high, higher low, higher high. So there was still a real chance of putting in a higher low before making a higher high because we hadn't broken market structure bearishly yet. So we're seeing the warning signs, the bearish warning signs that a bigger pullback could come soon, but we still hadn't seen the market structure confirmation for it yet. And it's maintaining this buying exhaustion channels is what we would say. Now, as far as our pitchfork settings go, I want to zoom out onto our daily time frame. And I'm going to show you guys that brand new pitchfork we pulled on Tuesday. Let me turn off our Elliott wave count here. And we will also hide our naked monthly points of controls. Okay, so first off, this is our bearish pitchfork. I've had this pitchfork on my chart for almost a year now. Actually, probably about 7 months now. Obviously, we had an all-time high range up in here. This was all of 2025's price action. That was considered the fair value for Bitcoin. We had our first major range high here, and that was clearly the end of a really nice impulse in here. And so that first all-time high is where I took the first pivot of the pitchfork. Then you go to the lows, of course, our key lows at 74K, up to your key new all-time highs. So that's the important lows and highs within this range. And you can see from that, we have had a pitchfork that has very, very nicely guided us through the major swing positions in the entire bear market. Now, the settings for my pitchfork, I have kind of termed these, named these terms myself because I have not seen a lot of people use pitchforks the way I do. So when I go into my settings, I just turn on the 0.5, which is the light green line. So there's a negative 0.5 and a positive 0.5. And then I turn on the golden Fibonacci ratio. That's that key psychological golden phi ratio. And that is the dark green lines. And they form, and then I just turn on the one, and then obviously the 0, right? The 1 and the 0 are the blue lines, the top and the bottom of the pitchfork. Now, I kind of coined this term because I didn't know what to call it, but you can see this is kind of like a band, right? This is a band here. So this is your lower band, and this is your upper band in here, upper band, lower band. And between these levels, you often form ranges and chop in the bands. So what I call them is a pitchfork band, and that's just a term I made up for them. But you have your upper pitchfork band in here, you have your lower pitchfork band in here, and then you have your top or your bottom, middle, top. And that is the way I trade pitchforks. And I've tested many different pitchfork settings. To me, this is the one that works the most, the one that has the most confluence as far as price action respecting the levels. But in order to pull a pitchfork, let's just actually, you know what we could do? We'll look at our local bullish trend. So let me hide we're in a sideways range right now, right? We're in this sideways range from the 80s down to like the 50s or 60, 58. Let's turn off our bearish pitchfork real quick. And let's look at our local uptrend that we're seeing from 57.7. So oftentimes you can pull a pitchfork from your wave 1 lows to your wave 1 highs down to your wave 2 lows. Now, if we're looking for a third wave is generally the longest, most aggressive, explosive, volume-filled wave to the upside. So you wouldn't want to go with a skiff pitchfork because a skiff pitchfork is the most sideways range. That's what you're looking for, like in a wave 5. But in a wave 3, you're going to want to take that pitchfork and you're going to want to turn it to an original pitchfork, which is going to give it its steepest angle of incline. And you can see here, actually, this is very interesting. We broke out of the pitchfork and look at, we've been holding the back test of the pitchfork as support. Let's go zoom out to like the 4-hour time frame. Because yeah, it looks like you can see after rejecting, we came down, back tested the upper band, broke out, kind of we're trying to hold the pitchfork as support now. But it is a good tool to look at your trend and to look at like important resistance and support levels within the trend. Also within price discovery. So if I zoom out to the daily time frame, when we were in our prior bull market, down in this zone here, after seeing that breakout after seeing BlackRock list, and then we got the BlackRock breakout with the spot ETF, and then we got this correction all of 2024. So I said, okay, well, this is likely to be a wave 1 here, a flat and a wave 2 here. Clearly, this is a wave 3. It is volume supported. If you turn on your volume, you have nice volume support on that breakout. You see volume increasing during that whole move to the upside. And then you look at, okay, if we're looking for our wave 5, if we're looking for a potential end of the bear market, we can pull a pitchfork from the lows of wave 2, or the lows of the third wave, to the highs of the third wave, to the lows of the fourth wave. And then we're going to put on either a modified skiff or a skiff pitchfork, which is a little bit more sideways. And then that should give us our important proper wave 5 targets. So I went in here and let me see, where's it at? Pitchforks. If we turn on that pitchfork, that's not the right one. This guy right here, from the lows of wave 3 to the highs of wave 3 to the lows of wave 4. Well, sure enough, look at, we were looking for shorts here. We were also looking for longs down at this lower band. I was actually looking to come to the bottom at 68 to 70, but you did hold support there with some bull divs. And then on the move to the upside, you flipped the midline, you worked your way up to that upper band, you rejected, and then you saw the drop. Now, one thing that I see a lot in trading with pitchforks is after you hit the top of the pitchfork, you generally see a pretty big correction from hitting the top of the pitchfork. If you bounce within the pitchfork, whether that's at the midline, the lower band, or the bottom, the next time you come up, you generally only come up to the upper band. You don't hit the top of it again. And I've seen this with many different assets over and over and over again. So as we were coming up to that upper band there, I mean, look at, you hit the upper band, you reject, you lose the pitchfork. By the way, when did we see our big aggressive drop here? After we backtest, we lost the pitchfork, closed a weekly candle, bearish backtest, bearish backtest, bearish backtest, bearish backtest, could not get back in, waterfall. So pitchforks are trend-based support, trend-based. You're looking at a certain trend to get those important support and resistance levels within a trend. And as far as our bearish pitchfork for our bear cycle, now that we kind of have our bearish pitchfork, if we can break out of our bearish pitchfork, I would say the bear market's over. Now, we're not even close to breaking out of that yet. Let me find that and turn that on. You can see we are breaking above the midline. Now, actually, gosh, yeah, if we come up and break out of the top of the pitchfork, it would be very safe to say the bear market's done with. But I would say even if we can start to break this upper band here, we're in business for at least, even if we retrace, even if we see a 1, 2, 3, 4, 5, something like that, and we reject here, we might see something like that where you bounce from the bottom band and then you see continuation in a bull market. And that would also give you your tap 1, your tap 2, your tap 3. Here's your accumulation for the bear market. Here's your expansion for the bull market. Okay, really quickly here. I want to go into XRP for Jesus Save 77. Okay, so XRP, very, very interesting. If you guys remember last week, and I think it was last Friday's live stream, I talked about how XRP was grinding sideways and down, and this was the overall low. From that low, we saw a straight shot to the upside. So I said that this was likely to be a wave 1. Bitcoin is in a wave 3 because we saw on Bitcoin, we saw that initial big move up followed by a correction. And then now we're in the explosive move. So we're in a wave 3. But XRP, we're seeing an explosive move up from the absolute lows. And I talked about how XRP could get hyper aggressive to the upside here because of that. What did we talk about last week? We talked about the SFP of this high, 155, into your value area high, where you had to watch out for a pullback in a wave 2. Okay. But we also talked about how this triangle in here, we have liquidity here, we have liquidity here, and we have liquidity here. So sometimes, because we've already taken some internal liquidity of the triangle, and that's when we saw our last dump, I said sometimes you will see that move up to take all of the triangle's liquidity. So where did we top out, guys? Where did we top out on Monday, Friday, whatever that was? SFP of the triangle highs. You got the SFP of the triangle highs, but your candle bodies on the daily time frame could not even break the value area high. Okay, so very aggressive liquidity sweep of the entire triangle. Now, awesome. Could this be the end of our wave one? And now we're in a pullback in a wave two right now. Yes, it could be. What I will say is this is probably the most aggressive push up you can get, right? Straight up on the daily time frame. So in a wave two pullback, the hard thing about wave two pullbacks is, of course, your most common target is the golden pocket, but your main targets for a wave two pullback, main targets are between the golden pocket and the 786. But in a very hyper aggressive trend, a 382 is still considered a valid target to bounce from in a wave two. So a wave two, uncommon targets are the 382, the 0.5. Common targets, the most common target, golden pocket 786, and a very uncommon target in a wave two, but not an invalidation, is the 886. That's what Bitcoin hit on its wave two here within the third wave. Wave one, wave two, 886 tap, explosion, right? So wave twos can be hard to find that actual price, but depending on the strength of the move to the upside, you can start to look at, if it's a super strong, aggressive move to the upside, you can start to look at that 382 as maybe, hey guys, we're going to try to attempt to bounce from that 382 because this thing has momentum up the wazoo. And so we're coming down to the 382, which is in confluence with your range point of control. And we probably wick down to hit the 0.5. Not quite. But the one concerning thing I see with this, and we'll have to zoom in here to look at this doji candle, because we want to see a confirmed three-wave corrective move. And then if we can start to break market structure by breaking above this low internal high, you could say, hey, wave two's done with. Now we're about to see an explosive wave three to the upside, or a C to the upside, right? Let's zoom into the 4 hour. All right, it looks like we do have a nice move. A, B, C. Now we can pull our trend-based Fibonacci, we can pull our trend-based Fibonacci extinction targets. And, you know, this one, we would even have to zoom in further. Let me just do this, actually. Let me get rid of this. And we'll zoom into the 1 hour, and we'll see, man, that's just one candle there. It looks like, let's zoom in even further. All right, so that initial, you did get an aggressive SFP. After grabbing that SFP, you got an aggressive dump to the downside. Now that we know that, we can alter the way we look at this. So we can pull it a couple of different ways, looking at this corrective move down, or what looks to be like a corrective move down. You could say from the highs of A to the lows of A to the highs of high to low to high, right? And we would be looking at that ABC target, 1-to-1 to the 1.236. So we haven't hit it. But because this was all part of one candle, it's a little bit aggressive. I would like to pull it as more of the looking at the overall structure. So from the high to this low in here, actually we'll do this low. Oop. It would help to grab the right tool. And to the highs, we'll put on our 1-to-1 target. And you're looking at that 1-to-1 target being around the back test of the value area low in your pitchfork. And remember, we're breaking out of our pitchfork. We only saw a small pullback before an explosion out of it. So that 129.8 to 125-ish level is going to be a very important level to look at. But the initial move down that we're seeing here, we do not want this to be a 5-wave move down. Okay, we want it to be a 3-wave corrective move. And then we want to start to break above this high right in here, which is going to be right around 155. So let me get rid of this. That's old. Let me get rid of this. And we will throw on that at 155. So at 155, we want to start to break above 155. If we break above 155, that gives us a pretty decent probability that this is done with and that we're going to keep shooting aggressively to the upside. Now, in a wave two, this wave one was pretty quick in time. Let's see. It was about 4 days long. So your corrective move, you don't want it, you want to see the low of your corrective move after the Fibonacci 382 time. So if you pull your trend-based fib time and we go from the lows to the highs of the impulse, yeah, we've surpassed our 382. So you want to make your low after this 382. And you can see we made our low right after the 1-to-1. So your correction is about the same length as your pump as far as time goes. 4-day pump, 4-day correction. That makes sense as far as kind of the symmetry of the move. So if the low is in from here, we would expect to break above 155 and we would expect to continue pushing up, really breaking above this high. But let's just talk about this as a possible scenario. We could be seeing a larger extended move here with like a or a 3-wave move here and a W. If we do get some sort of rejection and move like this in an X, and then you could get another Y wave to come down and hit this value area low in 1-to-1. And what that would tell me is that just this is going to be more of a sideways correction, and then you're going to get that explosive move. And sometimes after a hyper aggressive move like this, you'll range sideways for a bit longer because it lets the market reset. For now, we are attempting to bounce from our zone between the, that 382, 0.5. Technically, coming down to the golden pocket would be the best, but you also don't want to lose the value area low of this range. Let's talk in terms of our volume profile, not in terms of Elliott waves, but let's talk in terms of our volume profile. We're rejecting the value area high of the range. If we can't hold this POC backtest right now, which yes, we did see a few days of wickage below it, but we're not really closing any daily candles below it. Yesterday you did close that daily candle below it, but slightly below it. So if today our daily candle closes back above it, that means that this is overall trying to hold as support. And if it holds as support, you would expect to continue up. You would expect another attempt to break out of the range. But if we lose, and today's daily candle for some reasons ends up closing red again below the point of control, we would expect to move down towards the value area low, which makes sense, right? And we have a bearish pitchfork, which the last time we hit the top of the bearish pitchfork, harsh rejection. If we do, now that we're breaking out of that bearish pitchfork, if we do come down, that's a good area to back test to see continuation, right? And so our wave 2 might come down to the value area low 1, 2, and then we might get that big 3 pushing up to sweep that high into your larger golden pocket. But now we've swept all this internal liquidity, so this is no longer going to be an obstacle for us like it was last week. So for me personally on XRP, if we do come down towards the value area low in that 1-to-1 trend-based Fibonacci extinction, also it would be where your golden pocket is. If we do come down to that golden pocket, and let me just check this. Is this 100% move to the upside? No, 72% move to the upside. But if we do come down in this zone of support, I would say this zone of support in here, I'll be looking for longs. Now, let's talk about the larger time frames. This can either be an A or a 1. This pullback can either be a B or a 2. This move, if it extends, it's most likely going to be a 3, and then you're going to see a 4 and then a 5. But there's two macro scenarios from there. There's an A, B, C where you still reject and make a lower high and roll over, or you're going to see an impulse, a 1, 2, 3, 4, 5, and then that would say, hey, this is likely to be the end of the bear market. That's the low of the bear market. So depending on our macro move up, whether it's a corrective move or an impulsive move, is going to tell us whether that low is a truly the bear market low, or we're going to take that out. One concern I have on XRP is, let's zoom out to the weekly chart. We front ran a very, very key golden pocket. If you pull your macro golden pocket from the lows of the last bear market to our all-time highs, you put that on log scale because that's more than 100% move. You can see your golden pocket was front run slightly by, 99. It was front run by about 9-10 cents. So if we do see a larger A, B, C, overall, you're still in a lower low. You're still kind of making lower lows and lower highs. You could see a move down towards 90 to 85 cents. But either way, we would be expecting at least a 1, 2, 3 wave move to the upside, right? An ABC. So in other words, because this candle was so explosive and because it did break it broke market structure bullishly by taking out all these lower highs, I'm now looking for a higher low to be put in before now making another higher high. So I'm looking for swing long opportunities on XRP to take out the high from last week. And the best zone of confluence for me for that support is going to be your value area low, pretty much your value between like 129.8 and 124, let's say. So this purple green box in here is going to be an area, but money flow on the daily time frame, bullish on NAMI, green dot on NAMI, bullish looking on Market Cipher, looking like it wants to come up again on Market Cipher. You might just bounce from that 382 Fibonacci. And I just showed you guys that 382 Fibonacci. The fact of the matter is, with the 382 Fibonacci in a strong trend, it is strong support. You can see strong trend, strong support. It is right in confluence with that POC. What would give me more of a bias that this is going to be the wave too low is depending on our daily candle close today. If our daily candle does close above the POC, then there is a real chance that this could have just been the small pullback and that now we're going to continue. But in order to get super confident, to have super peace of mind, you want to break above 155, because that would say that this is most likely confirmed a 3-wave corrective move. And now even if you break it, pull back, you're looking for another impulse to the upside. And the next impulse to the upside, by the way, guys, the next impulse to the upside, if all of this was just a wave 1 or even a wave A, if this is a 2 or a B, you're looking for that C to be very explosive, C or 3. And we can actually pull our trend-based Fibonacci extinction here. You're looking to come up. I mean, like, look at this. Where it's no coincidence that the 1-to-1 trend-based Fibonacci extinction is right where our golden pocket is, pretty much exactly where your golden pocket is. So even in a bearish scenario, you're looking at an A, B, C, roll over, come down to golden pocket. In a bullish scenario, you could see this XRP really explode to the upside and come all the way up towards 326. You could see this be in 1, 2, 3, and then maybe something like a 4, 5, something like that. Yeah, and you can see that's where our resistances are. Major resistance here, resistance here. If we're looking at the moves down, golden pocket at the 1-to-1, at your POC, at liquidity, at key liquidity, and then your next major level of resistance is value area high and the 786 Fibonacci. That's of this all-time high range. You have this upper range, all-time high range. Right now, we're kind of forming a lower range down here. So just like with Bitcoin, guys, the lower range highs were just taken out. So let's look at this range high right here would kind of be equal to Bitcoin's 82.8K highs. So in other words, you have this kind of sideways range in here. XRP just took out the range highs. That is very bullish. Even if you see a pullback from taking out those highs, which you would expect to, it's major liquidity right there. You would expect to see a pullback. Even if we get that pullback down here, I will be looking for swing longs. So very cool. I hope that helps a little bit. Jesus Save 77. As far as scalp trades go on this thing, let's zoom in onto the 4-hour time frame. So on the 4-hour, money flow still looks really strong. Money flow's curving back up again. You did have bear divs between the breakout of the pitchfork and the highs of the SFP, but those bear divs have played out now, and you're seeing another move to the upside. If we are going to extend the correction, if we're going to see a bigger WXY being made, something like this, 3-wave move in a W, 3-wave move in an X, and then a 3-wave move down to the golden pocket in a Y, golden pocket value area low in a Y, then we're going to be looking still towards that golden pocket. So if you pull a golden pocket from the highs on Friday to the lows that we made yesterday, turn on your golden pocket. It's going to be right there. And that golden pocket actually is kind of important because you see we have these kind of semi-equal triple tops up here. High, high, high. So you would have a liquidity grab into a golden pocket if you do see something like this, and then you start to lose that high and the value area high. That is when you could see that move down towards the golden pocket. So if you wanted to, and actually I will do this, Jesus Save 77, I'm going to set an alert on the 155 high because that's important for us to understand for a bullish break in market structure, but it's also important for us to understand if we do pierce above that high and lose it, that is when we could come down to like 126, 128 zone. So the way I would trade that short, if we do see this grindy corrective move up there, we hit the golden pocket and then start to lose the high, You're going to short, you're going to put your stop above the golden pocket. Your first target is going to be taking out the low. That's already a 5.5 to 1 risk to reward ratio. But I would leave at least 50% of it open to come hit the value area low and maybe even the golden pocket below that. And then, of course, once we get down here, I'm going to be looking for those nice swing long opportunities to come up to your 230 golden pocket. Money flow looks really strong on Market Cipher and NAMI. If we go to the 2-hour time frame, no bull divs yet. So on this last leg down here, it would be nice to see some bull divs between this low and this low, right? It would be really nice to see some bull divs. So we are seeing 2-hour money flow cross into the green on NAMI and even curve up on Market Cipher. Those obviously multiple drives of bear div have kind of played out with a move to the downside. And let's see if on like the 15-minute time frame, we're seeing bull divs as we were coming down into that low. Actually, yeah, look at this. So on this move down that I just explained to you, you wanted to see bull divs. Well, you can see here you had some bull divs, and then now you got some really nice bull divs here as well. You can kind of see this whole thing. You kind of got the money flow bull divs coming in. Money flows crossed into the green, and it's pushing to the upside nicely. And then on NAMI, you had kind of all of this coming in. Now this last dump down kind of puts a wrench in that, but on NAMI it's quicker, so I would want to zoom out to the hour chart, and I would want to see the same kind of structure on the hourly. Let's see here. Do we see that? Not really. I mean, you did print some hidden bull divs down here, but money flow is crossing back up into the green. So yeah, today's important, Jesus Save 77, to close above the POC at 143.2. You need to close above that POC at 143.2. And that, if you do close above that, then you're likely to at least come up to your golden pocket around 157, 156 to 158. And then depending on what happens there, you might see a move down to 126. If you pierce above that, stay above that, maybe even just, back test and then continue. You're likely to continue taking out this, but this could all be aggressive. 1, 2, 3, 4, 5. You could see an aggressive move up. XRP, when it moves aggressively, guys. XRP will move very aggressive and then go sideways for a while. So also, with that being said, I would not be surprised if this does merge into a larger sideways range, especially knowing we're getting towards the end of the week. Of course, G-Save77, and thank you again for the super chat, man. Definitely not necessary to give another super chat, but much love to you, man. I thank you so much. I appreciate it, as always, so much. Adam Hartz, welcome in. Hey, Divine, I brought your name.com. I bought your name.com. Divinehood.com. I think I have that already. Yeah, I'm not sure, but if you want it, I can sell it to you. Could be a good name for a personal site. I already have divinehood.com. I think so. Or I have divinehoodtrading.com already. The domain already bought there. So I might hit you up for that in the future. Adam Hartz. Wayne Rosi, we can definitely look at Sol. I'm actually long on Sol, or I have still a little bit of Sol long running left. Real quick here, I want to take a second to shout out the partners of the channel. So let me get back to the Bitcoin chart. We're going to check out Bitcoin here. Oh, come on. We're starting to drop here. I don't want to see that. Come on, Biddy. Don't do this to us. We closed the 15-minute below the VWAP. That's not good. I know that our Bybit VWAP's a little bit lower. So we might see another move down to hit that Bybit VWAP. And if I get stopped out, I'll look to re-enter another long trade if that happens. Because say we lose, I'm only in 0.4%. Say I lose 0.4% on this long, but I have another chance to enter here and it goes up 5%. I'll be up on the day still. So, partners of the channel. The main partner of the channel is BYDFI. They're a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description, you can get a minimum of 20% discounts on trading fees, and you can earn up to 40% discounts depending on if you deposit large deposits or not. They're also offering up to $8,100 in futures trading bonuses depending on the amount of volume you move, and that's based on the USDT exchanges. So that's not only trading Bitcoin, it's all the altcoins, it's gold and silver, it's any of the tokenized stocks that are on there. Anything against the USDT markets, you can earn extra bonus cash rewards, USDT or Bitcoin, based on the amount of volume you move. And in my opinion, that's a great, if you're already trading on the platform, you're already trading USDT pairs, that's a great incentive to get extra money in your account. They are offering some of the best initial deposit bonuses in the entire industry. If you deposit $100, you can get a 50% deposit bonus. They're giving 20% deposit bonuses up to $1,000 and 10% deposit bonuses up to $20,000. So some very, very good initial deposit bonuses. You do need to KYC level 1 in order to qualify for those, but they are available. And I've also partnered with BYDFI to create that Telegram community. It's a private community, but it is free. And in that community, I try to keep you guys updated on any trades that I'm taking, not only on Bitcoin, but on all the altcoin trade setups that we look at during these live streams, on gold and silver, on any of the trade setups that I'm looking at. If those alerts go off that we set during these streams, I pop into that Telegram and I let you guys know, hey, I'm taking the trade, or hey, I'm not taking the trade. I don't see proper confirmation. And the Telegram, it's free to get into. All you need to do is join BYDFI using my affiliate link in the description and deposit a minimum deposit of $100 or more. You can deposit more if you want to get some of these bigger bonuses, but a minimum deposit of $100. That money's your money. You're not paying it to me. You're not paying it to BYDFI. You're just depositing it in the exchange to try it out. Once you've done that, click the Telegram link in the description of this video or our ping posted in the chat. In the Telegram verify channel, you're going to type in /verify and then your BYDFI user ID, which probably is going to be a string of letters and numbers for you guys, but /verify your user ID. It'll get you into the Telegram. I've also partnered with Bybit, MEXC. Those are KYC exchanges, and then Blowfin, another non-KYC exchange. All those exchanges are offering various sign-up bonuses and initial deposit rewards. It is a way to support the channel using any of these affiliate links. You can also just hit the like button, share the live stream, subscribe to the channel. That always helps, and I really do appreciate that support, you guys. Lastly, I have NAMI trading, which is this momentum and money flow indicator you see at the bottom of your screen here, and I use this for confirmations to enter and exit trades. So since I've been using NAMI, so as we're coming up to a key resistance or a key, what am I looking at here? Okay, let me get back to this chart. As we're coming up to a key resistance, this purple box, you want to see those bearish divergences forming on the chart. NAMI prints them out for you. You see the bearish money flow divergences. So it was good for at least a scalp short opportunity from that purple box because we had the divergences, the confirmations. And since I've been using NAMI for confirmation-based trades, my profit margins have gone up and it's pretty much paid for itself immediately. But if you're interested in purchasing NAMI, I have partnered with them to get you guys 50% off. Use discount code DIVINE50 when you're checking out on the website. DIVINE50 will get you a 50% off discount for that lifetime subscription. Okay, really quickly here, I want to go into some of the altcoins and gold and silver. I'm just going to cover Solana real quick. Pretty much, guys, I told you guys this last week. Solana broke out of the range highs at 98.4. We saw a small pullback. We held the value area high. We talked about this on Tuesday. Because the value area high held, we were likely to take out our highs from last Friday. But it looks like we're continuing to push up here. And I said last week, I said, if we start to break above the 1.236, there is nothing in here that is going to keep us from pushing up to our 1.618 trend-based Fibonacci extinction, where we also have our pitchfork midline. We have the value area low of our previous range. You can see that's our previous big range, our all-time high range, or this range that lasted a couple years. It went from March of 24 to February of 26, so pretty much a 2-year-long range. And then we have a range that's forming here that we're breaking out of the value area high. You can see last week we broke out of the value area high with a high amount of volume. And so we're looking at if this is going to be a bearish scenario, an A, B, C, where you would expect to reject within this zone and then roll over and take out the lows, or if we're going to see a 1, 2, 3, 4, we could see a move all the way up towards the POC, towards our anchored VWAPs, towards our pitchfork midline. So there's nothing really keeping us in between here. There's no daily levels. There's no, I think, let's turn on our naked monthly points of control, we have a naked monthly at 127. And then our 1.618 is at 121. That's why our box is where it is. Within that box, you have your value area low at 122.36. Naked weekly points of control. So maybe we're going to see something like this. A 1, 2, 3, 4, 5. Something like that. We get a 5-wave move up to 120, where we might see a small pullback from 117.4. That would be a level where I'd at least be looking for some sort of reaction. No weeklies up there. Daily levels, you can see we also have a daily at 127. So 127 is looking to be a pretty good level of resistance. And then naked dailies, you can see we have a naked daily at 127. And then we have a naked daily at 118, which is pretty much where your naked weekly is, which is a little bit stronger. So the next level of resistance that I would be watching for Solana, it looks like if we can close our daily candle today above 106.5, above this 1.236, it is likely that we are going to continue up towards at least that naked weekly at 117.4. But I would suggest we're going to come up towards this purple box. Okay. And then I would be looking for at least some sort of short from this purple box. But if this is going to be a bigger, I would be looking for wherever your wave 4 targets are before seeing a wave 5. So we can pull that if and when it gets there. We can do a theoretical one right now. Let's bring it up just to 127 because that's a good level. You would be looking for your wave 4 targets. And yeah, I would actually be looking at $99 because it would be the back test of the lower pitchfork band and it would be a back test of the range highs. Because remember, if you break out of a volume profile after rejecting from a major resistance, you'll either pull back to back test the range highs or you'll pull back to back test the value area high of that range. So that is what I would look for. But right now, it looks pretty good, guys. It does look like Solana wants to continue breaking up. And even in Solana, let's say this is going to be a bearish A, B, C. Sometimes in an aggressive move, your C wave can come up to the 1.618 and then roll over. A, B, C, expanded correction, and then you roll down. Within the C wave, 1, 2, we're inside a 3. I don't really see a pullback in a 4 yet. And then so we would need a 5-wave move within this. And even if we zoom in on this, you can actually kind of see you have like a 1, 2, 1, 2, 3, 4, 5. So maybe we're in our last 5-wave because within this chop right in here around the range highs, we did see a pullback. So we'll zoom in here. 4-hour time frame. Yeah, you can see that you have kind of this 1, 2, 1, 2, 3, 4, 5, 4, 5. So we're kind of finishing what could be kind of this ending move in here. But I would look to come up to 117.4, 117.4, 118, 118.2, 117.4. That is your next kind of zone of resistance before hitting the big zone. And the big zone, guys, on the bigger zone above us, I would really be mostly paying attention to the top of that box, to your pitchfork midline, which is going to be coming in right around 127, which is where your naked monthly point of control is, where your daily level is. And let's see, what else was there? There was also a naked daily point of control there. So look at all that resistance at 127. Major level. Breaking above this box is super bullish. If we can close the daily above this box, I expect continuation to the upside. Okay, on Hype, guys. Hype USD. Hype is also breaking up. We're hitting our pitchfork band of resistance. But look at this on the daily time frame from the lows, which, by the way, we were looking for a long position from this zone. You have your initial move up, your bullish break in market structure by taking out these daily lower highs. Now you can long the pullback of the golden pocket. So you could have longed here or you could have longed here. We had those moves, guys. We had confirmations for those moves. But we have a 1, 2, 1, 2, 1, 2, 3, 4-5, we're seeing a pullback right now from the pitchfork, but remember, you see a lot of chop within these pitchforks. So are we going to see our 4-5s coming in within this pitchfork band over the next few days? You have your 1-2s in here, and there's a couple ways to count this, this impulse. So if we zoom in onto our 4-hour time frame, you can see a very, very nice stacked 1-2s in here. You have your official first move up, your bullish break in market structure. That's a wave 1. Then we get this 3-wave corrective move down and a wave 2. We have another move up and another wave 1, taking out the highs. You have a move down and a wave 2, another move up and a wave 1, another move. So you could either count this as a double 1-2, where you're looking at this as a overall 1-2, 1-2, and then this is the start of the third wave. Or I preferably like to look at it as a triple 1-2 impulse, and this is clearly the start of the third wave, where look at all that aggressive momentum. Now we are hitting into our pitchfork band of resistance, and we could see a pullback from here. But even looking at from the lows that we flipped, the 76.9K highs, which was our all-time high, we broke above it, and then we back tested it as support, and we're pushing up. So from that back test of support, let's zoom in even further, because it looks like we're in a bullish structure here again. Hype likes to have these multiple 1-2 impulses. You can see maybe this is going to be a push up in a wave 1, or let's see. I was looking at this earlier. I was looking at least this structure, a 1-2, 1-2, and this looked like it was a 3. So we could be pulling back in a little bit of a 4 right now, as long as you don't overlap here. And then we get a 5-4-5. So I'm looking to come up towards 88, towards the top of the pitchfork band. But overall, we would have to look at this as some sort of, this looks like some sort of flat in here. So a wave 1, you get your flat, and then this is a 1-2, 1-2, 3. We could get a push up and a wave 3 here. Coming up, we are getting towards the top of your pitchfork band, and that is a big resistance. You can see the top of that pitchfork, or the upper band of the pitchfork, excuse me. That is a big resistance, and you could see another pullback from this area, because we have our 1-2s in here. Now we're looking for 4-5s. This clearly is, now we could even say this is our first 4, this is our first 5, this is our second 4. We're in our second 5 now, and then we could see one more 4 and one more 5. We're getting towards the end, and you can see how we're now starting to get that kind of choppy overlap in here. Starting to get the choppy overlap in here. So I would be concerned that it could be ending soon, but look at your money flow. Both NAMI and Market Cipher B, hyper bullish money flow. You had some bear divs in here that are now being locally invalidated. And overall, yes, could we see pullbacks from where we're at right now? Absolutely, we could. We could absolutely pull back. But I would say that as long as we don't break our market structure bearishly, so we can actually pull kind of a channel in here. Actually, this looked like a really nice channel with a one fake out of the channel. We had a correction of that channel, and now we're forming another channel in here. So what I want to look at primarily is from that low in the back test of 76.9. Let's throw on our parallel channel. You can see how nicely that parallel channel is being respected. Rejection, drop, rejection, rejection, drop. We're coming up. We're trying to break out of the channel. If we can't, you know, it is the pitchfork midlines or the pitchfork band. So yeah, we're expected to see some resistance. But overall, I think that we don't really see bear divs on the 1 hour. Let's see if we see any bear divs on the 2 hour. No bear divs on the 2 hour, but money flow is overall coming out. No bear divs on the 2 hour. Do we see bear divs on the 4 hour? No potential bear divs on the 4 hour, but not confirmed quite yet. You can see from this high to this high, you would have slight bear divs. But locally, no bear divs on NAMI. Money flow looks good on NAMI and Market Cipher B. So it looks like, yeah, it looks like this chop in this final channel in here could continue for a bit, guys. The next resistance I'm watching is that 88.1. It's like 88.1, 88.2. And then if you break and flip this pitchfork band into support, you could see a move up to like $99, $100. We'll cross that bridge if it happens. Very important resistance you're coming up into. But with this Stacked 1-2s in here. I expect to see some pullbacks and some 4-5s in here. And in the breakout, it is our all-time highs. We could break up to $100. Key psychological level as well. Okay, let me scroll down. If it is over, I'm deploying ever I got left on. Wait, if it is over, I'm deploying whatever I got left on the third wave down. Yeah, Crypto Wanderer pullbacks. I get you. You're deploying on pullbacks. I get you, man. Mark Dutch, Frenchie. Yeah, welcome in, French Toast. It's been a while since we've seen you. Another workout in the books. Time to go update the charts. Awesome, Travy Trades. That's great, man. Plus Divine is growing. Divine Hood is growing bigger. Yeah, I am. Thanks to you guys. You guys, thank you for the support. Thank you for always tuning in, being here on a regular basis. You know, I think part of what makes a channel grow is the good conversation that's had between me and the community. And I really think you guys ask some excellent questions. You guys truly understand trading. I know so many of you, you really understand trading on a psychological level as well as the technical level. So it's really cool to see. And I'm really happy of the community we got here. Really solid people. Peoria Beat, what's up, man? Good to see you. Okay. Can you check ENA? Yeah, we can check ENA. Let me scroll up real quick. The Crypto Rocket, thank you for the comment, man. Amazing TA, dude. Love your channel. Thank you. Well, thank you, the Crypto Rocket. I appreciate the kind comment, and thank you for the support. We might see another push yeah, can you check hype? Yep, we just checked hype. Okay. Okay, gold. Guys, real quickly, gold. The reason why I want to cover gold is because gold has been trading so nicely, and we have some really, really good opportunity. I laid this out to you guys in last week's live stream, if you remember. Just like with hype, we have a multiple 1-2 impulse, a 1-2, 1-2 in this triangle. We break out in a third wave. It looks like our third wave could be ending right at this box of resistance. Remember, I told you there was going to be 2 levels where this third wave could end. The third wave could have ended at your golden pocket, which was also at the top of your descending channel. You can see this big descending channel. So we could have ended that golden pocket or that third wave here, but we kept pushing up to our POC. And you can see now really, really nicely, we're seeing that perfect rejection from the 786 and the POC, which, by the way, I did get into a scalp short here. Now we're looking for a pullback. So let me just get rid of this. And I will delete this box now because it's been busted through. We're looking for a pullback. Well, when you break out of a channel like this, oftentimes you will pull back to backtest that channel before continuing higher. And so now that we have 2 1-2s in here, a 1-2, 1-2, we're looking, our third wave might be ending now. We're looking for a pullback in a wave 4 before seeing another wave 5, which I would expect to take out 47.73. Then we could see another pullback in another wave 4, probably to flip the point of control to support. And then we could see a move up to take out the overall lower high liquidity into your macro golden pocket. So for me, I'm ultimately looking for gold in the next couple of weeks to come up to about $4,900 to $4,950. And I will be looking for shorts there. You can see I have alerts set on that. I'm going to be looking for shorts here, but it will be a short to make a higher low before potentially making a higher high. But that would still be a really good short. Now on the pullback, let's look at the pullback right now. So we're rejecting from very key resistance, point of control 786. If we pull, let's zoom in first onto the 4-hour. If we look at the move down so far from that, the only way we can count this right now is a contracting diagonal. 1, 2, 3, 4, 5. You have this contracting diagonal, which could be a motive wave, right? There's overlap between the lows of 1 and the highs of 4. But if it's a motive wave, you would expect a breakup pretty much to hit the 786 or the 886, and then another move down, like an ABC. But in a contracting diagonal, your breakup generally comes pretty high, pretty aggressively up there. If we're looking at the end of our wave 3, so from the lows here, we need a 5-wave move to the upside. 1, 2, 3. Here's your running flat and a 4. Your 5 is done, and if that's done, you're looking for a pullback in your larger degree wave 4 now. That means your third wave would be done. So if we pull a Fibonacci from the lows of wave 3 to the highs of wave 3, we turn on our wave 4 targets. Wave 4 targets are going to be between 44.29 and 43.46. Well, I actually like this 43.29 a lot because you can see it's kind of where these prior highs were. And remember, those prior highs was the golden pocket. Let me turn this back on. That golden pocket. Oh, yeah, excuse me. It wasn't the golden pocket. The golden pocket was up here at the top of the channel. Okay, so the reason why I was mentioning this golden pocket, because when you break straight through a golden pocket like that, sometimes you come back and you back test it and flip it to support. Let me check out our points of controls for potential support levels. Okay, nothing on the weekly. We didn't actually hit the naked weekly point of control at 4,700, or yeah, it's at 40, pretty much 4,700. You can see we front ran it just barely. It's still naked from this week of the middle of May. We still have a naked weekly just above us that is still naked. So actually this might be some sort of corrective move that does break us up for a double top. We could get an A, B, C flat. We could get a flat in here for a wave 4. And that would allow us to hit that naked weekly. Actually, I am going to set an alert on that. Let's scroll up here. I want to get really precise on this because you can see we did not hit it. And I am going to set an alert there. That's from May's. From May. Let's look at our naked dailies. Okay, we do have a naked daily coming down around 44.92. And what I'm looking at this naked daily for, and then we have a naked daily down near 0.5 Fibonacci, because if we're looking at a larger retracement, we want to look for confluence between the 382 and the 0.5. And by the way, we did have that naked weekly also right here at 43.95. I just want to mark these out for a second. We can clean up the chart afterwards. We'll mark that as a naked monthly. Actually, that's this month. Yeah, I can't mark that out as a naked monthly yet, even though it's highly likely to confirm as a naked monthly. All right, there we go. And then what we can look for is if we're going to see, I mean, it's too early to tell right now if this is going to break up right now and then see another move down. We could look at, because that naked weekly is just above us, it's fresh. I would really be looking for a double top there, an A, a B flat, and then a C, which you come down and take out that low. Actually, this is interesting to me. So within our third wave, I'm just looking at this right now. Within our third wave, we have a wave 1, a wave 2, a 3. This could be our pullback for a 4 because it's equal in time to this 2. And then all of this could be a 5. So from that low, we would be looking at a 1, 2, 3, 4. We would actually want to make one more high, and that would end the third wave. So a double top there, whether this is a flat of a bigger a 4, or if this is the 5th wave to end the third wave, looking for a double top on gold right now around 4,700 is looking pretty juicy here, guys. I'm going to keep that alert set, and I will let you guys know the best I can. If we do get that SFP double top, I'll be looking for a short, and then we could look for, say we get that wave 5 in there, and then we get that bigger move down. That bigger move down, we could be looking to come towards the 382, which would be the back test of the channel, the breakout of the channel. Also, it's kind of your support resistance flip. You can see this is all resistance in here, turned into support. But either way, overall on gold within the next let's say month to 2 months, I'm looking for it to come to around $4,900, $4,900 to $5,000. And that's where I'll be looking for bigger short positions to come down to around 43. Okay, I'm already in a short, low time frame. Looks like 1-2s, 1-2ing into the downside. Yeah, if you're talking about PRB on gold, these could be 1-2s, right? So that it could be a number of things. This could be a 1-2, 1-2, 1-2, and you're about to see a big 3, and then you would see those 4-5s coming in. Or it's going to be a contracting diagonal. 1, 2, 3, 4, 5, contracting diagonal. You get your move up high, and then you get your second impulse to the downside. Let's actually pull a channel here. We want to look at the lows, and we want to bring it up. Yeah, so it is contracting still. This didn't hit it, and this didn't hit it. So it is still a contracting diagonal. It's a valid contracting diagonal right now, unless you hit the top of that channel. Interesting. Money flow looks good right now. Green dots going. You even had 4-hour bull divs on NAMI. Look at this. Bull divs, money flow curving to the upside between these two lows. So if we're looking at, because of that high just above us, that naked weekly, I am watching for that double top. Even if this is an A wave in a contracting diagonal, a B flat, and then a C. But if we're looking at a traditional, more zigzag pattern, A, B, C, then you want to look towards your golden pocket 786 for a rejection. And especially towards the 786, because a contracting diagonal, usually when it does break, it breaks pretty deep. The retracement goes pretty deep. And that 786 is running right where that internal liquidity is and right where the start of our purple box is. So that would make sense around 4670-ish for a potential. I personally wouldn't look to take that short. Maybe I would. I don't know. We'll set an alert there. You know what? Why not set the alert? If it goes off, if we see what we like to see, we can look for the short. I'll set it on the 786 as well. All right, let me check Bitcoin really quickly here. I know you guys like Bitcoin. We're looking at Bitcoin here. So Bitcoin's still holding. It's still holding our VWAP. And remember, the VWAP is an intraday trend-based volume support level. So if we can hold this VWAP, we expect to take out our local highs. We came so close. We hit the 886 pretty much. We were $12 away from hitting the 886. So I do think that we could see us take out the Monday highs. All right, I know there was a couple other coins that you guys mentioned at the start of the chat. Oh, Aster for John. Was I using this chart? Okay, so pretty much, John, remember we talked, sorry, I should stop calling you by your name. Boomdocs 8, remember that we rejected the value area high, we fell to the value area low, and we were at the POC, we were kind of chopping here, and we needed to break above it. So we have broken above it, but what I don't like about this looks corrective to me, and this looks impulsive to me. And if we look at our volume, we want to turn on our volume here. And yeah, the volume on the dump was very aggressive. And as we're moving up, volume is getting lower and lower and lower. So that is a sign of a corrective move before potentially seeing an A, B, C, and making a lower low below the lows of the dump. So let's pull our Fibonacci golden pocket here, golden pocket 786. And I just want to check to see if that is more than 30%, because that might be. Okay, only 21%. So we're looking to come into this zone. What I like better than the golden pocket, because you can see the golden pocket's already been tapped here, small pullback. You broke above it, kind of, you're finding still resistance at it. But what's the better level anyways is going to be the 786 and the value area high. That is going to kind of be your overall better area to look for a potential rejection to take out that low. Let's see if we have any naked dailies. Okay, no naked dailies above us. But you can see this naked daily right below those lows, and that is going to be interesting. I want to check to see if there's a naked weekly there first. Yes, there is a naked weekly there. So we have a naked weekly point of control coming in at 60 cents. Now let's look at our 3-wave corrective move. We don't know that this is done yet. It could continue up to the 786, but you can see, man, I guess that's a little bit lower than I would like to say. But yeah, if you remember last week, we talked about this, how this is a double bottom in here, but because we did see like a wave 1, wave 2, wave 3, or a C, right? An ABC. A, B, C, you had the blow off top and a C. Because we dropped so harshly afterwards and we hit the highs of your wave 2s, it now invalidates an impulse. This cannot be a 1, 2, 3, 4, 5. You're not, now it's a much greater probability that this is a corrective move that's finished. And now we're about to see continuation down to take out those lows. So, in other words, you're looking for shorts, and you're looking for shorts between the 786 and the golden pocket. Kind of the zone we're in now. And the other scenario, if you wanted to try to find a bullish scenario, the bullish scenario would be a 1, 2, 1, 2, and then you're looking for this to be a 3. But with your primary 1 and 2 being so much shorter than your secondary 1 and 2, it's very unlikely. It's a low probability. So it makes it mean that this is most likely a finished corrective move. You still overall did make a lower high, and now you're going to drop down. Now, it's harder because look at all these giant wicks here. This is low liquidity asset, very low liquidity asset, right? So you got to be very careful trading these things. But for me personally, if I was looking for a trade, I would be looking at shorting towards, well, really in the zone that we're in now. And then I would be looking to take out that low, or potentially even come down to take out 58.5. And if we're looking at a larger 3-wave move, taking out 58.5 into the 1-to-1 would make sense. You would then have to look at this as a W, then you get your 3-wave move down into X, and you'd see some sort of another Y there. But you're essentially trading this sideways range until it breaks. It does look like we want to come for that liquidity. Also, on this move up, you got the aggressive move up, started to follow by the choppy overlap here. Okay? Aggressive move up, choppy overlap. So now, are we seeing bear divs in the choppy overlap? Bear divs here. We are seeing no bear divs on NAMI on the 1 hour. Let's go to the 2 hour. Yeah, you do see bear divs on Market Cipher with the money flow bear divs. And you were seeing multiple drives of bear div. It got invalidated with that last high, but overall between this high and this high, you're seeing bear divs. So yeah, you are seeing bear divs. Money flows crossing into the red again just now. I personally would like to see this break up one more time and then reject. I would give you another drive of bear divs as well. But it could roll over. It could be something like that, where you're going to see that bigger impulse to the downside. All right, Bitcoin's doing nothing. Trying to hold on here. Trying to hold on for dear life. Let's see if we're seeing that continued bullish absorption. So this is the one thing I just talked about earlier in this live stream. We were seeing textbook bullish absorption from the lows. Let me just zoom in on here. From the lows on Thursday, this morning, we are making higher lows in the price action. Higher lows in the price action. We are making lower lows in the CVD. So right there is a bullish CVD divergence. That's good for the bulls. If the open interest is increasing during that move, it makes it textbook bullish absorption. So right now we're seeing a lot of shorts coming in, a lot of fresh shorts coming in, but they're not able to successfully break Bitcoin down to new lows. So you have a whale absorbing it. But the one concern I have with the bullish absorption we're seeing right now is this prolonged drop in open interest means, positions are closing out. Remember, you need new positions and new money to have absorption. So when you see this drop in open interest, it does make it less probable that the bullish absorption will play out. Right now, it just looks like we're forming a little triangle in here. And a triangle is a continuation pattern. So if you break into the triangle down, you have a higher likelihood of breaking it down. What we might see, what you see in bear traps quite a bit, or traps by the market makers, you have your triangle in here. You see it break down to grab the liquidity of the lows of the triangle. Everyone thinks this is a bear flag breaking down, but you grab the liquidity of the lows and then you push up. And that would also make sense as far as our VWAP goes for Bybit. So we might come down and I might get stopped out because we might break that low that we just made right before the stream. But if we do that and we SFP the low into the VWAP and then start to reclaim it, I'll just look to re-enter that trade. Okay, guys, if I've got only 20 minutes left. If you have an altcoin that you posted in the chat that I didn't get to, will you post it? I know there's ENA. I'll look at ENA real quick here. ENA, USDT. Wow, ENA actually, this looks pretty nice here. So we have our sideways range. You can see this sideways range in here. That's what we want to pay attention to. And we have our bigger sideways range up in here. I guess you would say this is kind of your overall fair value for the asset. You broke it down in the bear market. You formed a little bit of an accumulation range in the bear market. So are we breaking this thing up? What I would say here is it's important to analyze this guy in here. This range in here. And is it a true break? Is it a break with an impulse? So we want to see that. So let's pull our volume profile, first of all, from the lows over. You're breaking out of the value area high with increasing volume, extensive push to the upside. And I want to look at the overall lows. Dang, those. Okay, we just like Ethereum, we have a double bottom, which does complicate things. So we can either say the way we can count this is either a wave 1 here, a wave 2 here, and then all of this is your wave 3 that's in progress. But the way we would have to look at the wave 3 is you have a bunch of 1, 2s. 1, 2, 1, 2. Actually, this is probably 1, 2, 3, 4, 5. That's probably a contracting diagonal in a wave 1. You get a pullback in a wave 2. You get a secondary wave 1. You get a secondary wave 2. Clearly, we have a wave 3 here. Your pullback in a 4. So you're looking for at least 2 more local highs, at least 2 more local highs to finish your third wave. Let me do this a little bit different. Our larger structure is this. Wave 1, 2, your third wave, you're looking to break up, then you're looking to see a 4 and a 5, probably to backtest your pitchfork and your anchored VWAP. Within the wave 3, within the larger wave 3, it's not done yet. 1, 2, 1, 2, 3, 4. So we're likely to take out the local high from last Friday, or from Sunday, actually. And then even after that, if you see a pullback, you're likely to see one more high being made to end your wave 3. So what we can do is we can pull some targets. I want to go off the bearish. You can see we lost the pitchfork. We bearishly backtested it and rejected. I want to pull a golden pocket from that last high to low. We're going to put that on log scale. Yeah, and it makes sense. Why are we rejecting where we're rejecting, guys? Golden pocket, okay? Starting to see a golden pocket. That's also this daily order block. You can see there's a two daily order blocks in here. This little bunch of red, 2 greens, bunch of red. So that's your order block, your golden pocket, your daily level right up there. All right, your first weekly level is going to be up at pretty much 267. Wow, look at, guys, let me back that up. We were actually looking for a major swing short because we broke the pitchfork down. If we came up and rejected this right here, we were looking for a swing short. And it actually played out. Whew. That's awesome. Oops. So let me bring that back up there. We will just put this as a weekly now. Yeah, but you're at your golden pocket. You're likely to break out. You're probably you're gonna see, you know, 1, 2, 1, 2, 3, 4. Your first wave 5 is probably gonna end at the 786. Then you're probably gonna back test that golden pocket, and then you're gonna keep going up here in a final wave 5. Or you know, you could say 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 5 wave 5s, and then you would be looking for 5, 4, 5s up here. 5 1 2s, and then you'd be looking for 5 4 5s. I generally like to go with the shorter amount because then you're looking, you know, you don't want to be looking to short a 4th 4 5 and it never comes, or a 5th 4 5 and you only have 2. Other than that, there's not a whole lot that's keeping us. Our next big daily level is going to be right up. I mean, you have this daily order block, which is really important. The top of that order block is obviously a daily level. Ooh, yeah. Look at, we're rejecting a naked monthly point of control as well. So it was our golden pocket, our daily order blocks, and our naked monthly point of control. Of course, we were going to see some sort of reaction there. And then our weekly, we do have, it was also a naked weekly point of control, naked weekly, naked monthly. But if we look at our next naked weekly point of control, which remember, volume levels are like the best levels to look at, we have a naked weekly point of control at 2213. So we could see this last 4 5s. We see a pullback in a 4 here. We could see a 5 up towards the 786. We could see another 4 and then another 5 where we reject from that naked weekly. If you wanted to, you could look at your previous range, and I'm going to pull this volume profile, not using the listing, but like from the highs over to when we break this thing down. Yeah, and you can see your value area low is pretty much going to be there. So this is your upper range, but it's also pretty much the lifetime, the fair value for the lifetime of ENA. So after having a bear market where you lost it and had accumulation down here, what the market's going to try to do is it's going to try to pump to backtest that general area. And if you reject, you're going to fall back down into this price action and start to trade back down here. But if you can pump and get back inside your volume profile, you're likely to make your way up towards the POC of the volume profile. So we would have to just wait for that to happen. But it's likely that we're going to come up towards around 21 to like 22 cents. Okay, guys, remember, if you do want to join the Telegram, all you have to do is join BYDFI using my affiliate link, deposit a minimum deposit of $100 or more. Once you've done that, click the Telegram link in the description and type in /verify in your user ID for BYDFI, and that'll get you into the Telegram, and that is going to be where we look at all these alerts that we're setting and all the trade setups I post on Bitcoin. That is where you can get access to that when I'm not streaming or making a video. Okay, I do want to look at Time Attack. We'll look at Link, and Mind Tapestry. We'll definitely look at XST as well. Let's check Link real quick. We're going to be pretty quick with these because I'm running out of time. Chainlink, man, look at this. Chainlink is breaking out of the volume profile, breaking above our pitchfork band. We fell down to back test those highs. Remember, I said when you break out of a volume profile, you on a correction, and there was resistance here. Look at, there was a resistance box here. Just, you know, it wasn't as long enough, but after rejecting from resistance, you either come down and you backtest the range highs or you backtest the value area high. Well, we're backtesting the range highs right now, and we are holding. I think, look at where Chainlink, the anchored VWAP, along with that pitchfork midline, 13.96, like pretty much $14 there. Your range point of control, 14.17. We are also, there's another reason why we were rejecting that purple box is because it's the backtest of your previous range value area low. So you can see this is an upper range that we were in for 2 years or like a year and a half, right? You break that range down in the bear market. You form a accumulation type of range here. So now the market is pretty much deciding on Chainlink whether it wants to keep the fair value of the asset down in this zone or if it wants to break back up into this price fair value. So we're in the process right now of a major back test of our previous fair value of the past couple of years. We did bounce from our 5-year long range point of control. If you look going all the way back to August of 2020, actually that's 6 years now, going back to August of 2020, Chainlink has been considered, this is pretty much the fair value for the asset, right? All that 6 years. But within the 6 years, you have a year or so of here, 2 years down here, or a year or so down here, and then 2 years up here. So you're seeing those kind of zones. And now we formed a few months, you know, 6-8 months down here. We're trying to come back into this zone of fair value. So important back test that we're seeing right now. Look at that previous value area low. Look at where our coin price is at right now, right there. If we can close a daily candle above the value area low of your previous range, which is at, let's just say 11.8, then you're very, very likely to continue up towards the point of control. And with the point of control being in really nice alignment with that pitchfork midline and that anchored VWAP, that anchored VWAP's not the most important. Let me actually grab an anchored VWAP from these highs. Okay. Wow. Interesting. And I also want to grab an anchored VWAP from our lows. Okay. That's not important right now. So for Chainlink, you do have an exact double bottom, but let's go from the bottom here. Wave 1, wave 2. Clearly this is a wave 3 because we've hit the 1.618, or it's not clear. It's more probable, higher probability that we're in a third wave here because we hit the 1.618. So are we pulling back in a 4 right now before seeing a 5? Now the 5 could end at $13 or $14. Like those are your two key levels. Your anchored VWAP at 13, your $14 anchored VWAP pitchfork midline point of control. Let's do this. Let's go to our weekly. Oh, interesting. We do have a weekly at that anchored VWAP, guys. Right on that anchored VWAP, we have a fresh weekly level, 1330. Okay, monthly, okay. Daily. No, daily's in there. We're hitting in, we hit a naked weekly point of control last Friday. We saw a pullback from that. Let's go to our naked monthly points of controls. And I just want to see, hopefully we have one up here. That would be really nice. Yes, we do. Okay. So guys, this is your zone of resistance right here. The big zone of resistance is naked monthly point of control, weekly level, anchored VWAP from the highs, from our cycle highs, not our all-time high, but from this bull cycle, right up there at 1330. So I would be looking for a potential 1, 2, 3, 4, 5, ending here, seeing a big pullback from here, and then maybe continuation up, you know. We'll have to see after the impulse ends, but let's zoom in now onto our 2-hour time frame. And very similar to, it looks like we're forming some sort of sideways range in here, right? Now, this could extend, guys, because our wave 4, we want it to be similar in time to this wave 2, which it does. I mean, the low was made before the 382 Fibonacci. So if we look at this move up in your wave 3, clearly this is an impulsive wave 3. Your wave 4 low, if you pull a trend-based Fibonacci time from the lows of wave 3 to the highs of wave 3, you want your low of the wave 4 correction to be made after the 382 Fib time. So this low was far before the 382 Fib time. It was pretty much right after the high, right? Same candle. So could we be seeing something more of a sideways WXY where we do come down? And actually what I would be looking for in this, and by the way, that is going to be on Saturday, August 29th. So I would say you're probably going to make your low on Sunday or Monday. It would be best to make your low on Sunday or Monday. I would be really looking at this pitchfork band now flipping to support. So around 10.7, 10.69, 10.7, flipping to support. We can also pull our Fibonacci wave 4 target. Yeah, look at where your 382 is at as well. So that actually looks really, really nice. And now that we have that kind of flash crash there, you do have a liquidity grab of that flash crash into your 382 and into your pitchfork band. So the support that I would be watching would be that area right in there. %. Okay, so yep, that is good. Yeah, man, that would be really nice. Now, it looks like we just took out some internal liquidity. We could get a bit of a pullback from this internal liquidity grab. But the big level of resistance, the big level of resistance is going to be right in here. 13.2, 13 point, like 13 to 13.3. And then if you get above that, you're coming up to 14. Okay, space and time, USDT. Oh man, Mind Tapestry, I would be very careful trading this thing. You see these candles like this. This is a very low liquidity asset. And that means small money entering can move it big time. Wow. And this thing is in a straight up downtrend. I just want to check it to see if there's a larger chart. More, yeah. Dude, this looks like a rug pull, to be honest with me. From the highs, could you say something like a 1, 2, all of this is a 3, and then you're developing a 4 now before seeing another 5 down? I mean, I'm not going to try to count the sub-counts within this, but you really need to be paying attention to this sideways range in here. But look at all these sell-offs to the top, sell-off to the top, sell-off to the top, sell-off to the top, sell-off. I mean, it looks like to me this is a rug pull or a semi-rug pull where anytime there's a pump, it gets a sell-off. I would be very careful trying to even buy this thing spot. Locally, you flipped your value area, you held the value area low, you flipped the point of control to support, so you're likely to work your way up to the value area high of the range. But if we let's pull our Fibonacci golden pocket. Yeah, and I would really be looking towards golden pocket value area high for a potential resistance. But remember, with those wicks, you could wick all the way up aggressively. I mean, I would just be super careful trading this thing. And if we're looking at a 3-wave corrective move, A, B, C, your 1-to-1 is probably going to be right there as well. Yeah, it's your zone, right? 1-to-1 to the 1.236, and you're seeing a reaction right now from the 1-to-1. But you can see that this looks a little bit impulsive. This is a corrective move down towards your golden pocket. Yep, right towards your golden pocket. And then you're now pushing up. So I would at least be looking for a move. I mean, you could be topping out right now, hitting this 1-to-1. But I would be looking for a move a little bit higher to hit the value area high golden pocket 1.236. It's also a daily level in there. Daily level at 00925. That is definitely your zone of resistance right above. But I would really be looking for a sell-off from there. Maybe continuing this range, continuing to find a floor on this thing. You do have some nice bull divs. Look at all this on the daily time frame. Money flows crossing up on the daily time frame. Bull divs here. Bull divs all in here. Money flow crossing to the upside. So let's just speculate. Well, first off, look at this. This move right here, 3-wave corrective move, and you have not taken out the low. It's a double bottom. So it is more likely, because that was a confirmed 3-wave move and you broke this low right here, it is more likely that eventually you're going to come take the low before seeing a true pump to the upside. 3-wave move. That means no matter what happens over here, you're likely to take out that low. Now, could you pump up to take out that high first and then see a move down? Yes, you could come up to take out the high of that first, but I would really be looking for something like this. A, B, C, roll over to take out that low. And then hopefully from there, you get the actual impulse. JRN PTRS, welcome in, man. I'm doing very well, and thank you for being here. Yeah, the crypto rocket, we'll check out Tau really quickly here. Coinbase. So we are attempting to break out of the pitchfork band. Remember, we were looking at this bottoming range in here last Friday, and we were finding, we rejected from the top of our pitchfork on Friday, and we fell back inside of the volume profile. Excuse me, I had a brain fart there. We fell back inside of the volume profile, but you can see you were able to get back above it again. And look at what happened here. You got back above it. You back tested it as support. So the second you back tested as support here, you expected to take out this high. So we have taken out that high now with today's daily candle, and we're hitting a monthly level. We're seeing a reaction from the monthly level. What's going to be important here, Crypto Rocket, is if we close the daily candle below Friday's highs, you could see another rollback down. But if, let me say this is a bit confusing because we have our pitchfork band. If we can close a daily candle above the pitchfork band, that's a bullish sign. That means we could eventually even break up towards the next pitchfork level. But if you wick up, hit the monthly, and then close at or below your highs, you could see a pullback first. And then you might continue. You really want to close above 250 today, 250.25. Let me make sure that's a fresh monthly candle first off. Yeah, it is a fresh monthly resistance that we were rejecting from. Above that, you have a weekly that's at 270.78. This is a big weekly fair value gap that you have here. Yeah, and you're coming down to your VWAP and to back test that pitchfork band. So you really want to hold this and continue breaking up. And as far as our move, I mean, this is very choppy and overlappy, and it's hard to count an impulse in here. Maybe you can count some sort of contracting diagonal that ends with a blow off top, I don't know. You know, that's a bit tough for me to look at. But you did make a higher low. So you have a break, a bullish break by breaking all these lower highs, higher high, higher low, and then you broke up aggressively. You could say you're looking at some 1-2s in here. 1, 2, 1, 2, 1, 2, 1, 2, and then you would look for this as a 3, 4, and then you would have to look for some 5s in here. I mean, the Elliott wave count on this just looks disgusting, so I don't want to really follow the Elliott wave count. Too much choppy overlap in here. What I would say is you're looking at your levels, you're breaking above those highs. You want to back test these and hold them, you know, on the lower time frame. You want to back test this, hold it, and then continue up. So you really want to close the daily candle above 250. The next level really is 271-ish, 270.8, let's say. But the big level of resistance is up in here, which is going to be around 300 to 305. Okay, no naked monthlies. And really no naked weeklies even. I mean, until you get to 305, of course. So yeah, I would say 305 is your big level to be paying attention to. Now let's talk in terms of our pitchfork. You can see in terms of our pitchfork, we rejected the upper band, we came down and we found support at the midline. Look at all this support at the midline. And now you're starting to impulse up here. If you can break above this the upper band, you are likely to move up towards the top of the pitchfork. So you want to see that continue. You really want to see continuation. The monthly levels are strong. So you hit into the monthly, you wicked past it. Let's just say let's hope we don't see a correction and start to fall back inside, because you could see a correction to back test the value area high, which would also be the back test of the bottom of the band. And we'll know more next week, or we'll know more actually tomorrow, whether this daily candle closes at or below 250. Brain farts don't smell. Well, I don't know. Maybe they do smell. I mean, I smell something in the room here. Anyways, guys, let's check Bitcoin really quickly. I want to see what the order flow looks like. I want to see what our scalp trade looks like. And, man, we are just consolidating here at the VWAP, but it is looking like a triangle. It is looking like a triangle forming here, guys. Remember, triangle is a continuation consolidation pattern. So we dumped coming into the triangle. So technically, we do have a slighter probability of dumping coming out of this thing. But I'm really going to be watching for the fake out. So you dump in. This is the proverbial bear pennant, right? Bearish pennant being made. But a lot of people are going to trade that as a bearish pennant. And what we want to see is, instead of breaking fully down in the bearish pennant, you want to see something like a fake breakdown to grab the local liquidity. And then you would break up and continue up. That's how the market makers like to play these triangles. Because the Bybit VWAP is going to be below that low. I mean, that is a real probability that we could see that, just because your Bybit VWAP is there. So we might be waiting. We might see something like this. Boom, break back and get it back up. So if we take out the lows where I'm long from, and then we start to move up, I'll look for an SFP of those lows as well. So what I'll do is, on Coinbase, I will set another alert on the low at 779, 760-ish. And if we SFP that, and then, if we do something like this and then SFP it and get back above it, I'll look to re-enter another scalp long trade. But guys, I really do got to go. Tomorrow, I'll be live streaming tomorrow, 3 p.m. Eastern Standard Time. I might actually stream an hour earlier, so we can do like a 3-hour stream. So if you guys, let me know real quick in the chat, would you guys like that if I streamed an hour earlier, or do you want to keep it at the normal time? because I want to cover as many altcoins as we can. I want to cover Bitcoin. I want to cover gold, silver. There's a lot of good active trades right now, a lot of technically sound trades that we can take. So we'll do our best to catch these trades. We'll do our best to check all that out. So, but thank you guys so much. Let me know in the chat if you guys want me to stream, or in the Telegram. Pop into the Telegram, at me in the Telegram, and let me know, hey, stream an hour early tomorrow. Just want your feedback on that. Whatever's best for me. Okay, cool, man. Well, pay attention to the YouTube algorithm or whatever, because I'll post ahead of time. I'll schedule that stream at least 15 minutes to 30 minutes ahead of time, and you guys will see the thumbnail and the time on it. And so I might stream tomorrow earlier so we have a bit more time to cover more things. Yeah, and just remember, we're looking for a pullback soon, but it's looking like we could. I mean, look at even the USDT total chart, or the total market cap chart. We're at that kind of resistance zone of the pitchfork band, but I really do think we could see this thing break to the top to take out that high before seeing that bigger corrective move to backtest. And please do like the button, guys. Please do subscribe to the channel. If you want to be part of the Telegram, just join BYDFI using my affiliate link, deposit a minimum deposit of $100. Then you click the Telegram link and you type in /verify in your user ID for BYDFI, and that'll get you into the Telegram. I love all you guys so much. Thank you for the support, and I will see you tomorrow.